too.
Oh.
So.
Good morning and welcome to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me is Irv Rosenzweig. He's the president of RZ Wealth, and we're going to focus on the top 5 tips for getting started with trading ETFs. Irv, thank you as always for joining me at MarketSite.
Sure.
Before we get into that, I have to give you congratulations and a shout out
Exactly.
to our viewers in Philadelphia and our traders and colleagues on the Nasdaq Philex options trading floor. That was one of the most spectacular Super Bowls I can recall.
Yeah, it was amazing.
Watching.
It really was. And I mean, they exuberated team. I mean, they're into their faith. They're into team playing. They're into comradeship. It was everything you want to know about a team.
Right.
It's great.
And as a Giants fan, I do have to say Eli and Odell owned the Super Bowl commercials. That was
sure.
a highlight of the game also.
For
But
sure.
let's get into this. There's been many changes in product information, trends, and delivery. Let's spend some time on those.
Sure. Okay, so I just recently wrote an article called Thematic Investing. And just coming back from Inside ETF Conference, I saw you down there as well, which is a big event now. I mean, the explosiveness of ETFs and the availability of product is really amazing. It's almost daunting. I mean, there's a lot. And unless you have analytics or a computer or some sort of software that can analyze these things, it is challenging in that regard. But again, the landscape has changed dramatically in the availability of product. And relative to my article on thematic investing, you can kind of find your niche. So whatever your belief system is or whatever your inclination is, before it was much more difficult to follow that. Now you can almost find an ETF for any one of those niches.
What's been the biggest catalyst to open the door for retail traders?
I think just they're learning about ETFs. I mean, mutual funds were the way to invest for many, many years. I mean, for most of my career. And mutual funds are great. I mean, they basically allow you to participate and get a sense of either participation in indices or active management or whatever. However, they're challenged in the sense of not being tax efficient, not being transparent, and not being able to buy in by setting pricing. So ETF, again, you have the availability to set a price, you have tax efficiency, and you have an awareness of exactly what exactly you own within the context of that ETF.
So do you think retail investors have the ability to catch and ride the next wave?
I think they have to be careful. You never know what the next. We talked about this relative to cryptocurrency and the bubble. So what's the next wave, and how soon does that wave crash? So you have to be careful. I mean, you want to set a tone. And back on the day when we did basic financial planning, they talked about the financial triangle or financial pyramid. The top of the pyramid was really speculative, or maybe even tying into the trend or thematic type of investing. The bottom of the triangle is your basic stuff. Do you have enough money in savings? Do you have life insurance? Are you setting up the core? So again, if you can catch the wave, but again, you want to build your foundation solidly first.
All right, well, let's talk about the top 5 tips for getting started with ETFs. And the first one that you have is have a starting point.
Right. Again, most people don't know where they are, and if you don't know where you are, it's difficult to know where you're going. You really have to take a hard look at where your finances are, what your expenses are, what your budget's like. The software is out there, and your financial advisors can support you with that as well. I mean, again, we use a very robust system called eMoney. Fidelity bought eMoney for a lot of money, so they must have a belief system in it. But again, you want to know where your finances are. You need to have a starting point, and you need to map out realistically what your goals are and what your needs are relative to those sources of money. I would also get a second opinion, whether it be your accountant, your financial advisor, maybe even a third opinion. So again, you need a starting point.
All right, and the second tip that you have is to know which account to use.
Yeah, I wrote a paper a while ago, I don't know, maybe 15 years ago. It was called 3D diversification. It was beyond stocks, bonds, and cash. It was also the different tax ramifications of owning different assets within different types of accounts. So for example, in a taxable account, obviously you're paying taxes on dividends are being paid out, you're paying taxes if you take a short-term gain by selling something. So maybe certain things like seeking some components of income and maybe short-term trading should happen within a tax-deferred account. Within a taxable account, then you can maybe focus on your long-term holds and focused on capital appreciation, not so much dividend income, because again, you don't want that hitting your taxes if you're not claiming that income. So I think if you're smart about that, and there's not a lot you can control. If you can control taxation to a degree, you're already one up.
All right, and the third tip that you have is proceed with caution.
Yeah, exactly. Sort of what I said before. I mean, again, everything's sensationalized. Unfortunately, we're in media right now, and you don't sell media without some level of sensationalism. So it's neither warm. It's either really hot or really cold. There's no in the middle. So again, just be careful, whether it be cryptocurrency or whether it be certain obscure types of themes that you want to invest in. I would lay back a little bit. You can play a little bit, but again, remember that's play, and that's not a lot of money.
And this also ties into the fourth tip: do your research.
Exactly.
Right?
Yeah. Again, like I said before, there's a lot of stuff out there. Again, inside ETFs, you can go to ETF.com and take a look at that website. In addition to that, we use Morningstar, we use Thomson Reuters, I use Chaikin Analytics. I mean, there's many tools that we use that the public is not necessarily privy to. Yeah, you can go on Yahoo Finance and things like that, but as far as really getting into the nitty-gritty and finding out about expenses and comparing different things, you need some robust analytics in that regard.
All right, and to wrap up with the fifth tip, consult your experts.
Yeah, going back to what I said before, first of all, people don't necessarily know where they are. It's not easy to get to someplace if you don't know where you're starting from. That's the first part. Consult your experts on where you are, what you need to do to get to a certain point relative to risk management and things of that nature. Look at your tax situation, determine what account might be best suited for what type of investing, and then move forward.
All right, well, these tips sounds like they can transcend towards any investment profile.
Yeah, for the most part, for sure.
All right, well, thank you very much for joining us at MarketSite. And traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.